Good afternoon, everyone, and welcome to Stock Market Today. It's Wednesday, March 8th, 2023. And Ed, what kind of stocks are you going to be looking at today?
Well, it's a mix of stocks in terms of their performance and their sectors. Monolithic Power among the leading chip sector, Oracle, and C3.ai.
Okay, but first, let's go ahead and take a look at the indexes. S&P 500 closed up just about 0.1%. Nasdaq Composite led with a 0.4% increase for the day. Nasdaq 100 a little bit above that with a 0.5%. The Dow Jones Industrial was down about 0.2, and the Russell 2000 was about flat, maybe up a little smidge. And I guess we can start with a look at the S&P 500 or the Nasdaq, and seems like we're really struggling right now to kind of hold some of these support levels, and the moving average lines are really coming into focus.
Yeah, and they have been in focus for quite a while, but you can, and the 21-day is starting to get close to the 50-day. I guess it's nice that the S&P gained ground today. Ultimately, I mean, it's better than a loss, but it couldn't quite get back above the 50-day line. So that's just something to be there. And obviously there would be other resistance levels on the upside. And as you can see, it would just take a decently bad day to get below the 200-day line. So
Right.
we're again, we've been saying this, we're at a turning point, but we keep on turning. We keep on. It's not. We nudge higher, we nudge lower, and we haven't decisively done it. You could argue that we're still broadly in this trading range since early February, and we're in the lower part of that. So the rally has to do more to prove itself before you can feel more confident in this thing.
Yeah, at this point, it seems more like we keep on changing lanes rather than making turns one way or the other, as we kind of go back and forth in this trading range. So let's go ahead and take a look at the Nasdaq Composite. So that S&P 500, closing right around that 50-day moving average line. The Nasdaq Composite right there at its 21-day line. It's above the 200-day line. It's above the 50-day line, but I think we're kind of all looking at this support level around here and whether or not this can hold.
Yeah, and it's really hard to say. Obviously, Tuesday's testimony from Fed Chief Powell talking about he's open to faster Fed rate hikes, that really changed the dynamic. And really the dynamic has changed since early February. I mean, that's ultimately what's going on, is that people are seeing a lot more rate hikes down the pike than we saw back in January when we were rallying. It's like, hey, these Fed rate hikes are almost over. It's like, no, they are not. In fact, they might speed up again. So until we, can we hold on? I don't know, because look at all these moving averages. They are really going to be coalescing pretty soon here. So, the Friday's jobs report will be important. The CPI report, and it just seems like every economic report, every Fed speech is important, and it's just hard to make any headway when, at any moment, it could reverse course.
So speaking of the Fed and these economic reports that are coming up, we have the jolts today. What is your take on us being tossed to and fro by just the latest data?
Well, I mean, there you go. We're tossed to and fro. It's not much fun. It's not much fun to be tossed to and fro. I mean, it's the job openings were stronger than expected. I mean, the best argument you can say is that maybe January was especially warm, but people have pointed out, well, mid-February was pretty warm too, and that's when the jobs report data is all figured out. So there's probably not a lot of good news in the very short run that's going to change the direction on the Fed. We keep saying that the things will be non-events and then they become big events. So who knows? But you just have to see how the market reacts to it, and you just have to know that you can't just take 1 or 2 days and say, oh, that's it. We're on the way, or we're doomed. You can't really say that, because it's just one more. Just the next morning, a report will come out and change everything around again.
And sometimes it's been a little baffling because, of course, a lot of times good news is not necessarily good news. It can be bad news, but it has to be not too bad, because otherwise it's really bad news. So sometimes the investor's reaction to the news is a little volatile and sometimes a little unexpected. Just rounding out the discussion with the indexes, we can take a look at the Dow Jones Industrial Average. Of course, that got resistance at its 50-day moving average line, and really hasn't quite recovered from that yet. It's still above its 200-day line, but anything to note here?
Not really. It's not that far from its 2023 lows, the 200-day line. This has been the laggard. I think the other thing to look at is the Russell 2000.
Mhm.
I guess this is the best thing you could say because this actually held the 50-day line. I mean, it was a battle. It fell to its lowest level since January. It did hold. I mean, it's hard to get too excited about a fractional gain. So it's nice to see that. But the S&P and the Russell are at key levels. The Nasdaq is at the 21-day. Everything is very tenuous.
Yeah, and it was interesting that the Russell 2000 was undercutting levels, whereas the other indexes, or at least the S&P 500 and Nasdaq, were holding those a little bit better. Speaking of all the data that you were talking about, this is kind of having a big effect on the 10-year Treasury and the dollar. So maybe we start with the 10-year Treasury. 0TNX is the symbol for MarketSmith, and we had that pop above 4% for the 10-year yield, and then we came right back down and we're just hovering right below that.
Yeah, and this is also reflecting concerns that all these Fed rate hikes will weigh on the economy down the road. The short end has been continuing to rise. The 2-year yield, the 6-month yields, those are over 5% and continuing to climb even today. So that's part of what's weighing on the market in these last few days is that that's because those are more reflections of where they think Fed rates will be today and 6 months from now and so on. And the markets are really raising those expectations.
hmm And then over on the dollar, we're seeing UUP, which is a nice ETF to kind of give you a sense of the dollar's direction. That seems to have gotten some potential resistance at the 200-day moving average line. We're not quite sure because it could just blow right through there and keep on going.
Yeah, and this is obviously a big concern, especially for the companies that we trade in the stock market, especially, they export or they have operations overseas, bringing those dollars back. If the strong dollar means, it'll translate into weaker earnings here. So that's a big reason why the dollar's a headwind for the stock market.
hmm And rounding out our discussion, we can take a look at a few other ETFs, including XME. This is the miners and metals. A lot of these commodities, whether it be copper, even coal is represented in here, gold, you name it, steel. This, was looking very strong, pulled back over the last couple of days, but here's another one getting potential support at the 50-day moving average line.
Yeah, and that would be, and you can see how just a few days I can swing up and down very quickly. It's like,
Yeah.
oh, it was looking really bad here, then it was looking really good all of a sudden in here, and coming right back down. And individual stocks are showing even more violent action. Now, I mean, some are holding up, but others, are not. But it just shows you that herky jerky area where it could go either way in the next few days.
Well, and it also kind of shows you that a lot of times once you start getting excited because it's looking good, that's when the rug gets pulled out from under you, and it does that. And so then if you're not buying on the bounce, you may be buying late and not getting much traction on your moves. Let's go ahead and also take a look at Jets, which is got a lot of stocks that we've been interested in. United Airlines, Delta Airlines are two that come to mind. But the travel area seems like that's perking up a little bit, but we've had some false starts before.
A lot of false starts, ups and downs. I mean, this Jets is looking pretty good, and as you say, some of the names like United, Delta, and American in particular, it was odd that like some of the worst performers today on the S&P 500 were actually cruise line stocks, and so it's like
Mhm.
travel is this mixed bag. It's again like everything else. It's just hard to feel really confident that things will stick. Again, choppy markets, and that's where we're in. A sideways choppy market is just really difficult because it gives you just enough hints to get in, but then the strength immediately, ends at that point.
Yeah, that's the problem when you don't have a trend that's lasting. It's kind of hard to make too much in terms of the way of gains. Well, let's go ahead and round out the discussion with just a look at one of the big growth tech component areas, and that's the VanEck Semiconductor ETF. SMH is the ticker symbol on this one. A nice cup with handle. Again, it's trading above its 50-day moving average line. What's the benefit of going with an SMH over, let's say, some of the high flyers that are, showing some really strong action right now.
Well, some of the high flyers, it's one thing like an NVIDIA, which is sort of extended, but a lot of the high flyers have enormously big moves. I mean, some of them have had 10, 15, 20, 30% intraday drops in recent days.
Yeah.
So there's that. And so this one has a consistency. There's a lot of strength in it. So that is one reason why you might go with an SMH. And this is doing quite well. You can see the relative strength line on this is if it's not a 52-week high, it is awfully close to that.
hmm And this kind of leads us right into our stock discussion, and we can start with a fabulous semiconductor, Monolithic Power Systems. The ticker symbol is MPWR, and here we have it's a kind of a similar look as we just saw with SMH. A nice cup with handle. The handle is pretty, pretty. Tame, it's 11% depth compared to a depth of the cup that is 44%, so a little bit deep there. What looks good to you about Monolithic Power?
Well, I mean, I like how the volume dried up for the most part in this
Yeah.
handle. The handle has some depth. I mean, you needed that with after this huge run up. A tiny little handle wasn't going to shake enough people out. So this was enough. It even tested the 21-day line, but doesn't look wide and loose either. So it has this buy point, but if it got above here, I think that would be actionable. It also has pretty decent growth. I mean, not tremendous, but there's a lot of chip makers with only a few exceptions where you're seeing declines in profits expected for this year. So it's nice to see at least some growth and then picking up again next year.
hmm And if we could switch over to the weekly chart, as you mentioned, the estimates for this year, single digits, not impressive too much, but 18% for 2024. But what I think is more impressive here is the EPS growth rate of 31% and an earnings stability factor of 13. That goes from 1 to 99, the lower numbers being more stable. So the fact that this has got some stability to its earnings is pretty impressive for what's often known as a very cyclical industry.
Yeah, that's a really good point. This is on the long-term leaders watch list because it has a record of long-term performance. On a monthly, it's on the IBD 50. I believe it's on the big cap 20 as well. So there's a lot of reasons to like this. This has a nice long track record.
Yeah, and hits multiple time frames there. Let's go ahead and take a look next at Oracle. This is another tech giant that maybe people have forgotten about. It was something in the late '90s that everyone was had on the tip of their tongue at all moments. But is this something that is perhaps making a resurgence and something we should be paying attention to?
Well, the sales growth has picked up. Now, some of that, there might be some acquisitions on that, but maybe I think the cloud growth, it's finally getting that transition over to the cloud. I mean, it was a little late. After this big, long base, it has, a nice shallow handle. This handle's almost long enough to be its own flat base. So it's acting pretty well here. This is not a world beater. Okay, this is not growing super fast, but it is relevant to maybe some other database software makers too. That how this does and what its guidance is probably relevant to those firms and software in general. So yeah, again, this one could be something that people take on. Probably wouldn't want to. This isn't going to be the super screamer, but it might have a time finally to come back after a long period of declines.
Yeah, and that weekly chart does show there was quite a bit of time where the relative strength wasn't too exciting, but it certainly seems like it's been trending up nicely over the last year here.
Yeah,
So a lot of flat action on that monthly chart,
yeah.
not something you necessarily want to see. At that point, you start asking yourself, hey, why take the single stock risk when I can get about the same performance for the S&P 500? But the question is this more recent uptrend in the relative strength line something indicative of future growth for the stock?
But I
Um,
also want to bring up because I was saying, oh, is it relevant for other database software names? I'm just going to bring this up, MongoDB, because they have earnings tonight. They beat on earnings, but apparently their guidance was weak. So at least in the early going, this stock, which was sort of fording a bottoming base where at least the buy point would have been above the 200-day line, that's coming down. So just wanted to bring that up on that in
yeah,
that sector.
and definitely, I think this market is full of the haves and have-nots. Those that have already crossed their 200-day lines and their 50-day lines, and those that have not. And MDB is solidly in the have-not at this point. So let's go ahead and round out the discussion also with a look at C3 AI. Of course, AI. has been on a lot of people's minds, especially with Chat GPT, coming out and really impressing people. Um, is this something that is for the faint of heart, or I mean, it looks like a consolidation, but man, those are some pretty big moves.
Yeah, that's part of it. And for one, there's a few things. One, technically, while the pattern looks okay, I mean, so somewhat, it's wild and everything, but yeah, that's a big drop from 30 to 20. Then it surged 34% this day. Then from this point to here, it's given up quite a bit. Over 5 points. That's a pretty big drop. So if you bought near the top here, that would be a huge loss. So it'd be nice if it settled down. I mean, there are some elements. It's found support the 21-day line. There are some things there. Also note that if it weren't for the AI hype and hopes for growth, and they did have some bullish guidance, so don't get me wrong, but
Hmm.
like growth had slowed. It actually had a sales decline in the latest quarter. So, I mean, it hasn't happened yet. Maybe now it's going to take off. And obviously a lot of things are going on right now, but you're definitely betting on the future with AI, not on what it's doing right now in terms of fundamentals.
Yeah. Now, with that bet in the future, I mean, we've already talked about the 10-year Treasury yield. A lot of times, as the 10-year yield goes up, that does have an effect on future valuations and everything like that. So, are we kind of at odds here? If you're kind of betting on the future, but the future is going to say, "Hey, you've got to discount your valuation."
Well, that could be a concern, especially if things really break down, because it's probably these high growth names, these speculative growth names that could really come under pressure. Not necessarily the stock, but uh, it's not January anymore when all these stocks and AI and beyond were really powering ahead. So again, but then again, if yields come down, if we get a Thames jobs report, if we get the CPI, and all of a sudden things cool off a little bit on that front, maybe some of these speculative names will go on another big run.
Yeah. Bottom line, it sounds like there's a lot of ifs that we have to
A lot
wait
of
for.
ifs.
And unfortunately, that's what makes it tough to trade in this market, is because those ifs come around, and sometimes they work, sometimes they don't, and it just makes it hard for things to trend. We're seeing a lot of potential sector rotation underneath the surface, and that just means a tougher slog going forward. But thank you for the analysis, Ed, as always. Tomorrow, it will be Ken and I on the Stock Market Today video, so we hope you join us for that. And also, we will be back on IBD Live, as we are every morning. You can find us at investors.com/IBD Live, where we start 10 minutes before the market open, and we continue about an hour and a half into the market session. So do join us for that, as you get real-time analysis of what's happening day to day. Also, I should mention that since we did talk about AI, I've got the president of Robo Global, Bill Studebaker. He's going to be on the podcast. I'm going to interview him in about 5 minutes, and we'll be dropping that tomorrow on Thursday. And we'll be talking about, hey, what does AI do for the prospects of a recession, productivity, and get into some of the details from robotics, automation, and artificial intelligence. So we hope you join us for all of those things. We will see you right back here tomorrow. Thanks for watching.